What if income tax vanished overnight? Here's exactly what you'd take home on a $100,000 salary and what you'd pay. Instead, former President Donald Trump has recently floated the bold idea of eliminating the federal income tax system entirely, including the Internal Revenue Service, IRS, and replacing this revenue stream with broad-based tariffs on imports. While the notion of keeping every cent of your paycheck might sound appealing, the deeper financial dynamics reveal a far more complex outcome, especially for average consumers. How much more would you actually take home? Let's assume this proposal went into effect in 2025. If you're earning $100,000 annually, you currently fall into the 22% federal tax bracket. However, due to the progressive nature of the U.S. tax system, your effective tax rate, what you truly pay after accounting for bracket layers, is about 13.61%, based on data from TaxAct's 2025 calculator. That translates to $13,614 in annual federal income tax. Without this deduction, your take-home pay would increase by that amount, but that's only a partial view. Other taxes such as FICA, Social Security, and Medicare would still apply unless Congress restructured the entire tax framework, which isn't part of Trump's current concept. But don't count that money just yet. While removing income taxes may boost your paycheck, the proposed replacement, tariffs on imported goods, could quickly erode those gains. Here's why. Tariffs function as taxes on businesses that import goods. However, these costs are almost always passed directly to the consumer. According to the Nonpartisan Tax Foundation, under Trump's envisioned tariff strategy, the average American household could pay an additional $2,100 annually for everyday products. That's not hypothetical. It's based on economic modeling of past tariff impacts. Everyday costs could skyrocket. Some of the hardest-hit areas would likely include essential and high-ticket goods. For instance, the Anderson Economic Group estimates that even domestically manufactured vehicles, those with the lowest exposure to tariffs, could increase in price by $2,500 to $5,000. For imported vehicles, prices could rise by as much as $20,000, depending on the country of origin and materials used. But it doesn't stop with cars. A broad range of products that American families rely on would likely become more expensive under such a tariff-based system. Reports have flagged everything from clothing, footwear, electronics, appliances, and lumber to food and furniture as categories that could see price jumps. A trade-off with hidden costs. While saving $13,614 in federal income taxes may seem like a game-changer for a $100,000 earner, the reality is that inflated prices on essentials and major goods could eat into or even exceed those savings. Add to that the fact that some economic experts argue tariffs could lead to supply chain bottlenecks, retaliatory trade barriers, and slowed economic growth, and the net benefit becomes murky. Can this even be implemented? Legally speaking, it's not solely up to the president. The U.S. Constitution, specifically Article 1, Section 8, assigns taxation authority to Congress, not the executive branch. So even if the vision is clear, the path to implementation would require significant legislative cooperation. Conclusion. The idea of eliminating income tax might sound revolutionary, especially to middle-income earners. But replacing it with massive tariffs introduces a different kind of tax, one embedded in nearly every product you buy. While your paycheck may grow, your purchasing power might not. The dream of tax-free income could, in practice, become a pay more for everything reality.